Assalamualaikum and hi to everyone who are watching this video, especially to our Madam Dr. Shukriya Sa'ad. My name is Abdul Mustafa and I am the head of Finance Department for Sunway Berhad. Before I work with Sunway Berhad, I am work for Deloitte, one of the big four accountancy firm, about 5 years as a finance manager. Before we go more details about these presentations, let me introduce you our team members that will also take part into this presentation.
Assalamualaikum and hello, my name is Lama Hakim Bezara Fendi and I work for Sunway Berhad as a senior accountant.
Hello, my name is Muhammad Mazid bin Muhammad Zamri. I am the accounting manager for Sunway Berhad.
Hi and Assalamualaikum, happy greetings to all. My name is Khairul Amirin, one of the audit accountant from the Sunway Berhad. I've been working here since 2019 after I finished graduated my PhD in auditing. So actually it's a huge pleasure for me to give a present for today. So by not wasting our time, let's start our presentation.
Established in 1978, Sunway Berhad, a company who is only a team mining enterprise at the beginning of time, has been transformed into one of the largest and multi-industry company in our country today. Not to forget, Sunway Berhad has been listed as a top 100 stock in Bursa Malaysia, with 9 main business divisions all over 50 locations worldwide, such as Myanmar, Vietnam, Singapore, and many more. It is being supported by more than 10,000 employees and being guided by one and only founder and chairman, Tan Sri Dato' Sri Dr. Jeffrey Chia, in many various types of business. There are 3 factors to consider having a salmon reporting. The first one is the nature of business activity. It can be described as in what field or in what area Sunway Berhad has been involved in. Second factor is about the existence of a manager responsible for the activity. Every manager has a responsibility to look, oversee and evaluate every business activity in each segment, so with the data that been collected, it can communicate well with the chief of decision maker. Last but not least is the information presented to the board. Any information that been relevant need to bring to the table of the board of director by the chief of the decision maker to be discussed. There are also some of the criteria for the factors that need to be considered having a segment reporting. It can be divided into 4, which are: the first one is the nature of the product, second, nature of services, third, classification of customer, and the last one, the method of distribution. There are 2 types of segment, which are business segment and also geographical segment. Business segment is reflecting the type of business activity that we conducted, while on the other hand, geographical is more about location where the business has been conducted. I'm pretty sure that you guys still remember the one and only founder and chairman for Sunway Berhad, which is Tan Sri Dato' Sri Dr. Jeffrey Chia. For your information, he is also a chief of decision making or CODM for Sunway Berhad. CODM is responsible for assessing the performance of the company, to know where resources should be allocated, and the most importantly, know what is the future outcome, because he need to determine the direction for Sunway Berhad, where is Sunway Berhad is heading for the future. Being a chief of decision making in a big company like Sunway Berhad never been easy. That is why the CODM, Tan Sri Dato' Sri Dr. Jeffrey Chia, is being assisted and helped by the other leaders in Sunway Berhad. Those leaders can be seen and presented in this slide right now.
According to MFRS 8, there are 2 processes for determining reportable segment, which are a 10% threshold test and a 75% total revenue requirement. There are 3 bases for the 10% threshold test, which is number 1, revenue basis, number 2, profit or loss basis, and number 3, asset basis. They must have a percentage of 10 or higher to be considered as a reportable segment if the operating segment does not satisfy the 10% threshold and thus are not considered as a reportable segment. They must be combined and disclosed under the group of all other segments. Meanwhile, in order to pass the 75% total revenue test, reportable segment must account for at least 75% of external revenue. No additional segment must be reported if the proportion of reportable segment exceeds 75%. But if the proportion of reportable segment is less than 75%, an additional segment must be reported until the threshold is met. Even though the segment does not meet the 10% threshold on its own, an additional segment is recognized and reported. We will just highlight on a revenue basis for the assignment purpose in order to identify which reported revenue, including external sales plus inter-segment sales, account for 10% or more of total revenue from all operating segments. According to the calculation, property development is 9.14% and this is a non-reportable segment. Following that, because property investment equals 10% and it is classified as a reportable segment, construction receives 33.88, which is a greater than 10%, and thus is classified as a reportable segment. Next, trading and manufacturing also pass with a flying colors with 17.47% and will be reported as a reportable segment. Not to mention, healthcare received 13.72%, which is more than 10%, and will be reported as a reportable segment. Quarry, on the other hand, did not pass with 10% threshold test because it only received 7.02%, which is less than 10%. Property development and quarry will be combined and reported under all other segments. For segmental analysis, the 75% total revenue requirement is calculated by combining the external revenue of identified reportable operating segment, dividing by the total external revenue, and multiply by 100% to determine whether it is greater than 75% or not. Fortunately, Sunway Berhad passed the test with a score of 78.09%, which is higher than the required 75%. As a result, no additional segments are required to be reported. The new segmental report is shown here and it includes revenue, operating segment result, transaction, and other information about segment asset. There are 4 advantages of segment reporting. Number 1, transparency and improved visibility, which make it easier for shareholders and financial analyzers to evaluate and monitor the company's performance. Number 2, the segmental report will be a predictor of a company's profitability. Segment reporting can reveal which areas are profitable and which areas are drained on the bottom line. Number 3, respect decentralized businesses. A financial analyst will not praise or critique a company directly but will comment on the leadership of that sector president or sector company leader. Last but not least, optimize contacts. Segment reporting also provides investors with a better understanding of the fluctuation that may impact the overall numbers. There are 3 disadvantages of segment reporting. Number 1, segment reporting only emphasizes the present, overemphasize or end up with rely on short-term company report and performance only. Number 2, data manipulation. If the information is reported in the true management eye style only, segment reporting leads itself more to manipulating the data. Last but not least, number 3, time and analysis. This analysis may be time-consuming and difficult to meet the criteria of how each sector is performing, especially if the sector share resources or capital with the others.
So next, I will explain about the basic preparation of the interim report. Firstly, Sunway Berhad publish quarterly interim financial reporting. The reports are being prepared on a periodic basis, which is 3 months for the 4th quarter. Sunway Berhad prepared its financial statement using the Malaysian Financial Reporting Standard, which we call MFRS, for the financial period ending 31 December 2020. The interim financial report is unaudited and is prepared in accordance with MFRS 134 Interim Financial Reporting and paragraph 9.22 of the Bursa Malaysia Security Berhad listing requirement.
So, I'm going to tell you about the 2 accounting policies that our company Sunway Berhad apply, which are MFRS 121 and MFRS 140. According to MFRS 121, foreign exchange entity may carry on foreign activity either by transacting in foreign currency or having a foreign operations. There are two types of currency. The first one is functional currency, is the currency of the primary economic environment in which entities operates, and the second one is presentation currency, is the currency in which financial statements are presented. Secondly, which is MFRS 140, investment property. And investment property is actually a land or building, part of building or boats that held for specific purpose, such as to a rental or capital acquisition, and not used to administrative. If the building held for administrative, then it cannot be classified as investment property. Instead of, it has to be classified as property, plant and equipment under MFRS 116. In order to recognize IP, it has to meet two conditions which are probable that the future economic benefit associated with the item flow to the entity, and the cost can be measured reliably.
I will explain about the types of interim report. Sunway Berhad present the quarterly report for the financial year and the 31st December 2020. Type of interim report that presented is such: condensed statement of financial position, condensed statement of comprehensive equity, condensed statement of profit or loss plus other comprehensive income, condensed statement of cash flow, and selected explanatory notes.
Now we are looking at a period for the current and comparative of each statement prepared by the company. There are four statements that we will go through one by one. The first one is a statement of financial position. For the current interim report is between 1st January 2020 until 31st December 2020. And for the comparative is between 1st January 2019 until 31st December 2019. The second one is a statement of profit or loss and a statement of other comprehensive income. For the 3 months ending, a current interim report starts from 1st July 2020 until 30 September 2020, while comparative is start from 1st July 2019 until 30 September 2019. For the 12 months ending, a current interim report starts from 1st January 2020 until 31st December 2020. For the comparative, it starts from 1st January 2019 until 31st December 2019. The third one is a statement of changes in equity. For the current interim report, a period is between 1st January 2020 until 31st December 2020, and for the comparative, the period is between 1st January 2019 until 31st December 2019. And the last one is a statement of cash flow. A current interim report, the period is between 1st January 2020 until 31st December 2020, and for the comparative, a period is between 1st January 2019 until 31st December 2019. Now let's proceed to the next one, the adjustment for the interim report. The first one, inventories. The cost of inventory is 1,804,924, while the net realizable value is 1,609,450. The adjustment value of inventory, which is the lowest of cost and NRV. So the value of inventories to be reported in statement of financial position is 1,609,450, the value of net realizable value. The second one is trade receivable. The gross amount is 2,353,254. The estimated collectible rate is 95%. The adjustment, the value of trade receivable is equal to gross amount times with estimated collectible rate. The value of trade receivable to be reported in the statement of financial position is 2,235,591 ringgit and 30 cents.
As you can see, this is Sunway Berhad segment of financial position extract for the year ended 31st December 2020 that show the effect before and after the adjustment.